A lot has changed in the area of compensation, but a lot's really stayed the same. And bank boards, particularly compensation committees and management, need to continue to work together closely and partner. And there has to be a sound process in place to exercise oversight about incentive plan arrangements and balancing risk in these compensation plans. And there has to be really good documentation, strong processes, and certainly the ability to align pay and performance, as well as communicating the plans to the participants. So making sure that you conduct your annual risk reviews and communicate to employees what the expectations are, as well as support the desired performance metrics. Board members really need to be aware that even though we're in a strong economic environment, you cannot relax. The desire for high-quality talent is fierce, and the market is so competitive that compensation programs and dollars being spent are just on the move every single day. And then there's the shareholder advisory firms, which are not going away, and they have their own scorecards and expected standards, which change from year to year, but you really need to be mindful of those just so that you're making your decisions in line with what do your investors expect. And you get that from your institutional investors as well. In addition, the regulators are expecting to look at things that they never looked at before. And so you really need to have good processes in place, make sure you're balancing risk, make sure you're conducting thorough risk reviews, and that you're aligning pay with performance. In today's environment, boards and compensation committees really need to practice heightened corporate governance. I mean, that was a big piece in the sound incentive compensation policies that has been in place for many, many years. And so it's important to know that you have to be open to new things and doing things differently. It seems like every year, the rules become more stringent, or the expectations from shareholders, institutional investors, and the regulators become more stringent and more broad-based as well. So you really need to be looking at what are the concepts at play. How are you managing risk? Are you doing the most you can to align pay and performance, and setting appropriate expectations with your executives and your employees? And then what are you doing with regard to the treatment of equity? And have you been talking about how you vest your equity, and are you aligning that with what the market expects? So there is a lot to do. There's a lot that continues to evolve because it's a very dynamic situation, but you really need to be on top of it and work together with the governance committee and make sure you have the right structure and framework in place.